Dalian iron ore prices, impact of India's steel tariff and China's demand. On Tuesday, iron ore futures found themselves in a tight trading range as investors carefully considered the implications of new temporary tariffs on certain Chinese steel imports, while also keeping an eye on the encouraging demand from China. The September iron ore contract on the Dalian Commodity Exchange, DC, saw a slight uptick of 0.21%, reaching 711 yuan, approximately $97.26 per metric ton. In contrast, the benchmark May iron ore on the Singapore exchange dipped by 0.87%, settling at $98.50 a ton as of 7:05 GMT. The recent tariff concerns are casting a shadow over steel exports, which in turn is influencing the demand outlook for iron ore in the upcoming second quarter, according to insights from broker Galaxy Futures. Just a day prior, India announced a 12% temporary tariff on select steel imports, known locally as a safeguard duty, aimed at curbing the influx of inexpensive shipments, particularly from China. This move has sparked tensions, with Beijing accusing Washington of misusing tariffs and cautioning other nations against entering broader economic agreements with the U.S. that could be detrimental to their interests. Despite these challenges, steel production in China saw a notable increase of 4.6%, reaching 93 million tons in March, even as the government attempts to limit production capacity, as reported by ANZ. They noted the robust buying of iron ore by steel mills, coupled with a decrease in imports, has led to a significant drop in inventories. Indeed, total iron ore stockpiles at Chinese ports fell by 2.39% week-on-week, now standing at 134.6 million tons as of April 18, according to Steel Home data. However, it's worth mentioning that hot metal output experienced a slight decline of 1,000 tons month-on-month, and profits for steel mills have also taken a hit, as highlighted by broker Everbright Futures. Hot metal output is a key indicator of iron ore demand, making this information particularly relevant. On the supply side, iron ore shipments from Australia and Brazil saw a minor increase of 0.1% compared to the previous week, as noted by consultancy Misteel. Meanwhile, other essential steelmaking materials on the DC faced losses, with coking coal and coke prices dropping by 2.42% and 1.83%, respectively. Steel benchmarks on the Shanghai Futures Exchange also showed signs of weakness, with rebar prices dipping by 0.74%, while hot-rolled coil and wire rod both fell by around 0.8%. Stainless steel prices were not spared either, decreasing by 0.63%. As the market navigates these complexities, the interplay between tariffs, production, and demand will be crucial in shaping the future of iron ore prices.